Hey EKFG family and investors, it's Aaron Kane here. I'm just shooting this video from my home study. It's Sunday the 22nd of August. So yesterday on Saturday we all heard of some pretty devo news on, about COVID tightening restrictions, or Melbourne tightening restrictions due to COVID. So yeah, that's pretty crappy for a lot of us. I'll admit it, like our son now can't go to childcare, which is a bit more difficult for myself and Lee. We'll be managing him now at home while I'm working here at home and helping our daughter with grade 2 as well. So bear with us in this time. I know a lot of people going through something similar. So, if you do need anything, reach out, let me know. But I'll be helping my wife in between kind of working and seeing you guys as well online. So bear with us, but we're all in the same boat together, and let's just make sure we stay safe and get through this. So what I'm going to do, guys, is start with the 2021 June quarter update for our Weinberg portfolios. And 2021 financial will be remembered with phenomenal performance in share markets since our economic slump since March last year when COVID began. The economic upswing saw share markets both domestically and overseas in the financial year hovering at new heights. So pleasingly, this strong run of performance saw domestic ASX 200, so the top 200 stocks in Australia, set a record high of 24% surge over the financial year, which is huge. That backed with the Australia reporting GDP and unemployment back to pre-pandemic levels has obviously seen a lot of our returns, our portfolios, our super funds and pension accounts have some decent returns over the last year. Now, this optimism was obviously seen in the US markets also, which will continue to breach new highs as well. Market optimism never wavered over the quarter, despite the emergence of the new Delta variant in COVID-19, which promoted a new wave of lockdowns, both locally and overseas. So it's good to see that possibly markets around the world are a little bit COVID-proof. A lot of that's probably to do with government stimulus as well. Although, this relief rally in markets has been warmly welcomed, we do remain conscious that global COVID-19 cases are highly volatile among moderate vaccine penetration. So I think things won't settle down 100% or a lot until we've got a lot more, obviously, vaccine across the world. So let's talk about what we did for the quarter. So what changes were there? So things that Zenith came to us was in relation to our alternative asset classes. So we added in this fund called Janus Henderson Multi-Strategy Fund. And the idea around this portfolio is to give you guys an investment manager that invests in internally managed hedge funds strategies. And what it does, it obviously there to help optimize the portfolio's ability to deliver strong absolute returns even while markets are falling. So protecting capital in falling markets is very important for our investors like you guys. Also there as well, they were with mindful of the strong rebound experience in listed property markets, we also marginally reweighted the portfolio in favour of broader opportunity in Australian shares. So we removed a little bit from the Australian share listed property funds, put a bit in Australian shares, which has previously seen some great returns as well since then. Otherwise, over the quarter, we were advised of the impeding departure of a portfolio manager in Capstream Absolute Return Funds. So the head guy managing this fund has left. So Zenith came to us and said, look, we've got a great replacement, and they swiftly replaced Capstream with a high quality fixed income manager called Franklin Australian Absolute Return Bond Fund, which this fund has historically shown and delivered consistent outperformance with limited and infrequent drawdowns, meaning limited and infrequent, meaning how often the markets or this fund has dropped down in return or reduced. So over the quarter, let's talk about the best performers and returns for the quarter. So the first one we want to talk about is SGH ICE, which they delivered 10.92% for the quarter. And over the last year in total, this fund has frequently been in the top performers. So this is a great contributor to the market performance in our portfolio. Reason being is this manages highly flexible mandate, which permits investments primarily outside the ASX 100 into smaller, faster growing companies. So what that means is SGHIs don't invest so much in the top 100 stocks in Australia. They're investing in smaller companies outside the top 100. So they're not doing the major four banks, miners and so forth, because those funds are probably did really well in the 90s. All the banks, possibly now they're solid, but are they going to be doing double digit returns? Probably not. And that's why they're getting good performance. And the second best performing fund over the quarter was the iShares Australian Listed Property Index Fund, and they generated 10.69% for the quarter. So it's been really encouraging to see the funds rebound so strongly, particularly in light of the Delta strain, which is having a disproportionate impact on listed property markets because it's, with the lockdowns and then getting back to normal, back to lockdowns, the property market just doesn't know how to handle that. So what are we looking at over the, outcome and long-term effects? So Zenith have come to us and said, look, over the long term, their views of the market remain pretty positive. And although they do continue to advocate for high quality managers and look for them to help with this uncertain terrain over the medium term, moving forward, Zenith believe that our portfolios are well positioned to withstand any additional COVID related volatility while still participating in market gains. So they believe we're in a good position, how we structure these portfolios, that even with some market movements, COVID movements and volatility, we're still going to have some decent gains going forward. But next quarter, what they are doing, Zenith said that they are going to do a full comprehensive review of our international share funds in our portfolios and just look for new opportunities should they present to them. And if they do, then there's something that we'll probably be taking on and maybe changing some international shares, funds and managers that we've got you guys in at the moment. So I hope that quarterly June update for 2021 was informative. If you've got any questions, please reply, flick me an email, reach out to me. Happy to answer any questions you've got. If you want any more details on the portfolios, let me know. Stay safe, guys. Happy investing and hope to see you all face to face very soon. Thanks now. Bye.